thank you very much for giving us your time here on CNBC-TV18 yet again, and welcome to India.
Yeah, it's nice to be back. I was here, I guess, about a year ago.
In 23.
Oh, with 20. Yep, you know better than I do. So I was here 2 years ago. I get around the world a lot. I travel for a living, as you might guess. I'm probably on the road about 80% of the time, and so I may not have made the rotation through India last year, but I get here quite frequently, and I'm very excited to be here this week.
And it's good to have you here. But, before we get down to some of the business, for our audience, just briefly take us through who is Christopher Nassetta? What was your first job in hospitality? What really got you going in the industry, and your moment where you said, this is it, this is what I want to do?
Yeah, that's interesting. Nobody probably is going to be interested in it, but I'll tell you, as I've said many times, my career in hospitality started in the toilet.
Yeah, in plumbing, I hear.
In a form of plumbing. When I was 16 years old and I needed to have a job because, my parents said, if you want to have money, you need to work because we're not going to give you allowance. And I said, I'm interested in the hotel business, and they helped me find my way to a hotel. And I was at the lowest level in the hotel as the lowest level person in the engineering department, which meant I had a lot of work to do with clogged toilets and lots of other things. But that's how I technically got started, but then I went and got an education. I went to the McIntyre School of Commerce at the University of Virginia. I have a degree in finance, and I got out and I got into the real estate development business, but focused initially in hotels and a lot of other spaces within real estate. And throughout, 15 years, I guess, I was doing things in and around the hotel space, and I was doing things outside the hotel space in both finance and real estate. And I kept realizing, that there was a gravitational pull that, that one way or another, I ended up sort of finding my way back dedicated to the hotel business. And so after a while, I said I really shouldn't fight the gravity, that it's an industry that I love. I was always fascinated by it from the time I got started in as a teenager, but just the complexity of the model from an operating point of view, from a finance point of view, from a branding, a commercial, and every other element of what makes the business tick. And most importantly, just how global it is I very much love traveling and seeing the world and view myself as a global citizen. And so it sort of fit the bill, but it was not, I started at very low levels. I went into a bunch of different, related areas, and then ended back in the business for all the right reasons.
The T word these days, the trade and tariff concerns and the huge uncertainty that brings in, talks of a recession in some of the largest economies, and slowdowns are not good for any business, least of all travel and tourism and hospitality. How's 2025 shaping up for you? We heard your earnings con call that the weakness you saw in the first quarter continuing to seep into the second quarter as well.
We did. We definitely saw a bit of a slowdown as we got mainly to the end of the first quarter, really in March. And that has seeped into April. But it hasn't continued to decline, and it's still showing in the United States and in almost every market around the world, positive growth. And so the way I think about it is we still feel quite constructive about the way this year is going to play out. You've looked at our earnings. We brought our overall guidance down a little bit
to 2%,
to reflect to reflect what's going on, but we brought it down also reflective of the fact that we think when the year is done, we're going to have positive growth. There is a lot going on around the world. There are geopolitical issues, tariff issues, macroeconomic issues that come as a result of that. But I think when you lift way up, and still the United States is the biggest market we have, it still drives 75% at the moment. It will go low over time. That drives 75% of our earnings capacity. I think, markets are funny things. Like, they can tend to overreact. And so, my own view is that, the sort of the risks of downside, upside are pretty equally weighted.
Okay.
And what the market has been saying more recently, well, up until a few weeks ago, is it was more weighted to the downside. There's a common theme in how I look at life, which is lift up, stay steady, don't panic. That this administration, the president want to get better deals, but they want to make trade deals, and that they do want to settle things down, and that they do want the economy to be strong, but on the right basis. So I would say markets are generally pretty efficient. The market's saying, all right, I think we might be headed in a way that we're pivoting to a little bit more, sort of a little bit less uncertainty. And that, markets don't like uncertainty. That's what you saw in the equity markets. That's what you saw in the bond markets. Yeah. And the reason you've seen those sort of pivot back around a bit is there's not total certainty, but there's a little bit more certainty. So when I look at like when we end the year, I think we will end the year with positive growth in the world. I think we'll end the year with positive growth in the United States. And then if you look at our model is really spectacular because we're basically a consumer branded business, a capital light business. We have same store growth and then unit growth, and you add those two together, and that's sort of how we get to bottom line growth. Our unit growth numbers are really strong across the world. So we opened 2 hotels a day last year in the world. Yeah. We have the biggest pipeline. We signed more deals than we ever have in our history last year. We started more hotels under construction than any year in our history. So we come into the year with a lot of wind in our sails in the sense of our unit growth. So there's a teeny bit of uncertainty on same store, but keep it in perspective, our unit growth numbers are 6 to 7. So they're the disproportionate part of the earnings driver. And our unit growth is performing quite well and is quite resilient.
Yeah, but like you said, last 2024 is probably one of your best years. 2 hotels a day is the number that you're talking about. But now, especially in the leisure category, what is the kind of impact that you expect to see play out until this period of uncertainty really passes? I mean,
leisure was sort of normalizing before all this. If you think about it, coming out of COVID, pretty much everywhere in the world. Yeah. It turns out when you lock people in their basement in their closets, they can't go out, then you let them loose. They really want to go out and have fun. Loose, Funny how that happens, but it did happen. So you had this huge release of pent-up demand that came in the form of leisure business, where leisure, both from the standpoint of occupancy, but definitely price, rate, was way over any sort of pre-COVID norms. What we've been seeing for the last year, year and a half, really mostly over the last year and coming into this year, is a normalization where we're sort of going back to the normal patterns. The pent-up
demand has been met.
The pent-up demand has, I think, largely been met. If you look at like the ratio of leisure business to our overall business, it's not quite back to where it was pre-pandemic, but it's getting awfully close. So I don't really think that there's fundamentally anything wrong with leisure. There was a normalization going on. Now, I'm not going to say like at the end of the first quarter and a bit of the second quarter in the United States and maybe in parts of the Western world generally, there was a little bit of caution in the air because of uncertainty on trade policy, et cetera, that was accentuating it a bit, but I wouldn't say dramatically. I think that was happening all on its own. At the same time, what's happening and continuing to happen is business travel, which had taken longer to come back, is coming back. And meetings and events, which are longer lead time business, continue to chug and churn and continue to go up. So again, when you blend it all together, I think you're going to see in the world, in the United States, at some point I hope we'll talk about India, because India is leading the world to a large degree. But I think you'll see it be positive. I think you'll see all segments, business transient, leisure transient, and meetings and events on a global basis be higher than they were last year. Leisure not by much. Business next, and meetings and events the highest.